Okay, hi everybody. This is Franjo, and welcome to another series of training sessions. Today I'm going to be talking about cross-currency correlations, which are crucial, very important topic. You do need to understand how the currency pairs move, what they do, how they which currency pair will affect the currency pair that you're trying to trade. Cross-currency analysis is really crucial. Here, as you can see, this is the 5 cross-currency correlations that I made. The top part shows you, I've set it up like this so that you see which currency pair will basically be flat. So this is the currency pair that you do not want to trade. You do not want, just to give you an example, if pound dollar is going up and pound yen is going up, you definitely don't want to trade dollar yen, because dollar yen will be flat, not moving. Okay. Same goes for euro dollar and euro yen. If euro dollar goes up and euro yen goes up, then dollar yen will be flat, not moving. Okay. Think about it. Buy euro, sell dollars, right? Euro dollar going up. And buy euro, sell yen. Euro yen going up. Therefore, sell dollars and sell yen. What will happen to dollar yen? Both currencies are weak, so dollar yen will be flat, not moving. So you do not want to be trading dollar yen. Okay. Obviously, same. If it goes the other way around, pound dollar going down and pound yen going down, then dollar yen will be flat. Down here, as you can see, if you're trying to trade euro yen, you have to stay out of it if euro dollar is moving up or has potential to move up. Now, when I'm talking about moving up or moving down, obviously you do not know what's going to happen in the future. But cross-currency correlations is all interconnected with the setups itself. If you have a reversal setup, for example, long on euro dollar, and you're hitting that level, euro dollar has potential to move up. It may not be that great because the 1 minutes are too close, or for some other reason. 15 minutes chart has not turned. It does not look that nice. So, but it's still at support. It's still a reversal long setup on euro dollar, and you're also hitting a reversal setup on euro yen, right? Because they're moving both at the same time. Usually they follow each other. Euro dollar and euro yen, just like pound dollar and pound yen. Euro yen will drag euro dollar in one direction or the other. Same goes for cable. When pound yen flies in one direction, it will drag cable with it. So now, to get back to my example, you're hitting a reversal long setup on euro dollar, and also a good reversal long setup on euro yen. Euro yen looks nicer, bigger gap to the 1 minute. Nice 15-minute chart and 5-minute chart, both turning crossover, whatever you like for your reversal entry. But then at the same time, you see dollar yen actually hitting resistance. Maybe a 5-minute trend trade to the downside, so potential short. Therefore, you have to stay out of euro yen. You have to stay out of euro yen. You cannot be taking euro yen, even though euro yen has a good setup. But if dollar yen moves down, if the setup works out, and euro dollar moves up, if the setup works out, euro yen will be flat and not moving. The easiest to learn cross-currency correlations if you take 3 currency pairs that go together. It's a closed loop: euro dollar, dollar yen, and euro yen. So the best way to is watch those 3. Have only those 3 open. Don't worry about anything else. Have those 3 open, because nothing in the market can happen that will affect one of these currency pairs that you will not see within those 3 pairs. Meaning, nothing else can influence your currency pair. one out of those three, nothing. You will see it within the three currency pairs because they depend on each other. They move together, okay? And let me show you. I've done this in my session before. Probably a lot of you have seen it before. What is the reason for that? It is really important to understand how come they relate so much to each other and how come they're very important to watch. Well, you can do it for yourself. If you take the current price, you take a calculator, you take the current price of euro dollar, which is, let's say, what is it right now, 128, 128.13. You multiply that by 85.33, and what you will end up with 109.33. And what is 109.33? Well, that's the current price of euro yen. So if dollar yen goes down 10 pips and euro dollar goes down 10 pips, what will happen to euro yen? If it's a cross, if you multiply euro dollar value times the dollar yen value, so if dollar yen goes down 10 pips and euro dollar goes down 10 pips, euro yen will go down probably 15-20 pips at least, if not more. Okay, so it's really important to understand that they're interrelated. On the other hand side, if you take a look on the right hand side here, when you're trading cable, especially cable, it's really important to watch euro pound because euro pound will be the one showing you the entries. So right here, as you can see, cable will be flat when euro pound is going up and euro dollar is going up at the same time. Now, what's really important is not only the cross-currency correlations on top here. What we are looking at are the perfect storm setups here at the bottom of the file. Okay. So take a look at perfect storm setups. Actually, I can move the file for you. Just go down, look at the file. Perfect storm setup, and this is what you're looking for. The first part of the file will show you which currency pair not to trade because it will most likely be flat, and the bottom part of the file will show you which currency pair to trade. So that's the perfect storm setup. Therefore, if you're trying to trade euro yen, if you want to go euro yen long, you want to see dollar yen hitting a long setup support and euro dollar hitting a long setup support. I'm right here on the file, as you can see. Here, double arrow means it will fly up. Okay, so if dollar yen goes up a little bit and euro dollar goes up a little bit, euro yen will fly to the upside. On the other hand side, if dollar yen goes down a little bit or euro dollar goes down a little bit, euro yen will fly to the downside. There is nothing else euro yen can do. If dollar yen goes down 10 pips and euro dollar goes down 10 pips, there is nothing else euro yen can do. Euro yen has to move down not only 10 pips but 20 pips. So what you want to be looking at is always, before you're getting into a trade, you want to be looking at perfect storm setup. You want to trade the pair that has the biggest potential to move. You want to trade the pair that has the biggest potential to give you pips quickly. Therefore, while trying to pick which will be the best one to trade, obviously you can't be always right because price action can switch back and forth. But when dollar yen is hitting support, let's say a 60-minute bounce trade. There's a 60-minute box, potential bounce trade, and euro dollar is hitting also support at the same time. You have to be trading euro yen. You have to be trading euro yen. So here's the Tiger Trader, Tiger Trainer. So let's have a look at it. This is pound dollar and pound yen. They're related. Pound yen, you would like to see pound yen at resistance when you're trying to go short on pound dollar. So let's just do a quick example here. We're getting in our one of my favorite trades, a possible 5-minute entry. That would maybe look something like this. 15 minutes are here and the 60 minutes are there. So trying to go short here. This area looks okay. You can get back to the 1 minute. All good. But if pound yen is not at resistance, you do not want to be getting in. You want to wait for pound yen to get to resistance. Now in this example, let's just say pound yen is just right now above the 1 minute, above the 1 minute boxes. And actually support for pound yen is a little bit higher here. I mean resistance, sorry. Resistance for pound yen, similar entry, 5-minute entry, right? Around this area. If it looks like this, you do not want to be getting into cable short here because you know this is actually your sell area. So instead of getting in cable short here, you want to wait for pound yen to also hit resistance. By that time, cable would be somewhere around here probably, and you would get even a better entry. So always watch pound dollar and pound yen. If you're trying to trade cable, watch pound yen, but at the same time also watch euro pound. Euro pound will show you the way. And it's not that difficult, but like I said, take only 3 currency pairs that are related, like pound dollar, pound yen, and dollar yen. Watching euro pound on the side. Same goes for euro dollar, euro yen, dollar yen. Watching euro pound on the side. You do that and look only at those 3 and watch for setups. Again, if you are hitting support long setup on euro dollar, long setup on dollar yen, well, you're taking euro yen. You have to take euro yen. If you're hitting support long setup, or let's say this time short, if you want to go short on cable, you're hitting resistance, your 5-minute trend entry, like I just showed you, and if you see it at the same time, dollar yen hitting a 5-minute trend trade entry, well, which one are you going to take? You have to be all over pound yen, because pound yen will be the fast mover. So it's really important to understand cross-currency correlations and perfect storm setups when you trade. Watch for cross-currency analysis. Take 3, analyze them, see how they behave, and go from there.